Good morning. This is Jason Moss with Georgia Manufacturing and Manufacturing News Network. Today, we've got a fantastic show we're going to be sharing with you, and we're going to be talking about some of the challenges that all of us are facing as business leaders and business owners around finance and workforce, some of the challenges that COVID-19 has brought to us. And I'm really excited to be able to bring this content to you, because every conversation that I've had with business leaders around the state, these things have come up. Some of the challenges, again, that we're facing in the financial world. What is PPP? What's the second round? How are things looking in our business and in the number side of the house? And really, more importantly, one of the probably the most active conversation that I have with folks is about workforce. How can you, as a business owner or business leader, manage the challenges that we face as far as getting people into work, making sure that we keep them safe, and if you've got a workforce where you send people out to do maintenance or go into other facilities, what are the liabilities and some of the challenges that you need to consider? Can you mandate people getting the vaccine? Can you tell people before you can go out and see customers, you got to get a vaccine? What does that look like? So I am waited with bated breath to learn all about this thing. And what I'm going to do is I'm going to pitch it over to my co-star, Mr. Russ Dunlop. Russ has been with us for quite some time now, and he has been a great supporter and partner with us. And anytime that I've asked questions, he's been able to find the right professional to bring us the content that we need. So his role in GMA is to be our interface with Taylor English. So if you got questions, he's kind of your go-to guy. And I'm gonna have him introduce himself, tell what his role is at Taylor, and then also as the liaison with GMA. And with that, I'm going to mute my mic and I'm going to listen. So take it away, Russ.
All right. Thanks, Jason. Good morning, everyone. My name is Russ Dunlap. I'm a partner at Taylor English Duma. We are a general practice law firm located in the Cobb area down the street from the new Brave Stadium. It's not really new anymore, I guess. And we are a general practice firm. We have attorneys in all areas of practice that you can think of, that a manufacturer or service provider, just about any company in Georgia, from startup to Fortune 500. We have all the attorneys that they would be looking for just about any area of practice. I've got two attorneys with me here this morning. We've got Christina Moore and Renan Gall. They are both partners. Christina's practice is in the corporate group, and she has spent the last year neck deep in all the new COVID financial packages that have been rolled out from the federal government, all the relief packages, SBA loans, PPP, and everything in between. Way outside my area of practice, so she can talk about it much better than I can. And I've also got Renan Gall here. He is a partner in the Labor and Employment Group, and he is here to talk today about all the relatively new labor and employment issues that have popped up in the last few months. We've got the vaccine rolling out, so there's a lot of new issues. I know there's been a lot of webinars and a lot of information that's come out in the last year, so you might be wondering, what's new. We've been dealing with this for a year now, but there's a lot of new stuff that's coming out in the last few months, especially with the vaccine rollout and the new round of relief and the new administration. So without further ado, I'll just hand this over to Christina to get started, and I'll be watching the chat to see if you have any questions at the end of each segment. I guess we can go through any questions anybody else has, but feel free to ask in chat. So otherwise, I'll hand this over to Christina.
Thank you, Russ, and thank you, Jason, and thanks everyone for having me here today. I'm gonna do screen share, so bear with me while I get this going. All right, so I'm going to talk in basic levels about what the relief options are out there, that, as Russ alluded to, that the new legislation that's come out. I'm going to do a deep dive into the Paycheck Protection Program, both from a first draw and second draw. And I know there was a kind of a draw in between, but the government is calling it first draw, which is everything before the December 27th package passed, and then a second draw is after December 27th. So to get into that is, what are the relief options out there? And we've got the second draw PPP, the employee retention credits, which is something that's been opened up now to businesses that did receive a paycheck protection, which is different than before. So I'll dive into that a little. Then you've got shuttered venue grants, which are new and people are excited about those. And then you've got the expansion of the FFCRA, and Renan is going to talk in more detail about that aspect of things. So I'll touch on it, but not really dive into it. The employee retention credit, that was something that previously, if you got a paycheck protection loan, you could also not claim. And with the passing of the new legislation, the consolidated supplemental, it's the CAA, Consolidated Appropriations Act, they now have opened it up that if you did get a paycheck protection loan, you can still claim the employee retention credits. And you can even go back in time and claim those. And with the change in legislation, they have expanded the credits as well. So anything prior to January 1 is based on the old numbers and the old calculations, but anything going forward is based on the new calculations. The slide here gives a pretty high level view, but the most important thing is you can now, if you got a paycheck protection loan, you can still claim those credits for for 2020. And in claiming those credits, you just won't, if you use paycheck protection funds, you just won't be able to claim credits during the same time period that you use the funds. So say your covered period was an 8-week period. During that 8 weeks, you can't claim employee retention credits, but after the 8 weeks, you could for 2020. So that they've expanded who can claim them, and they've also, going forward, they've expanded the amounts you can claim. The interesting thing also to note on these employee retention credits is that an eligible employer is a business that has been either fully or partially suspended due to orders, or that experienced a decline in gross receipts of at least 20%. The other thing to note on the fully or partially suspended, if you had in your supply chain and someone that you supplied goods to or services to, if they were affected by a shutdown, that in turn is something that you can claim for a full or partial shutdown. So you can also claim it in the supply chain as to you. Let's see, and that, like, the biggest things are, now you can get it if you got a PPP loan. That was not the case before. On this, I'm recommending people reach out to their accountants because you're going to have to go back in time to amend or fix filings if you want to now claim it. And this is something that a lot of businesses are excited about because it's an extra grab at money that you otherwise couldn't have gotten when everyone jumped on the paycheck protection wagon. The other thing that I wanted to highlight is the shuttered venue grants. That's something that people are excited about. It's primarily for venue operators, live venue operators and promoters, performance venues, motion picture venues. And the interesting thing to note on these is that you cannot get a second draw PPP loan if you're going to apply for a shuttered venue grant. The shuttered venue grants have not opened for application yet. So if you're someone who says, oh, well, I want a shuttered venue grant, you could be waiting for them to open those and passing up the second draw PPP loan. So what I'm recommending is that clients apply for a second draw PPP loan and also apply for the shuttered venue grants when they open, but make sure you don't accept that second draw PPP loan if you're going for the grant. So that way you're kind of trying to track both things, because what if you get shut out of one? Next, this is the area on the FFCRA. There was changes on the Consolidated Appropriations Act with that, and I'm going to kind of leave that for Renan to talk about, but that's another avenue that you can claim different credits on. So like I said, I'm going to leave Renan for that. So we're going to move on quick through that slide. So now we're going to dive into the second draw paycheck protection loan. Eligibility for this is you have 300 or fewer employees per location. You have to have obtained a first draw paycheck protection loan, and you have to have used or will use the full amount. I believe they're typically requiring you file for forgiveness before you apply for the second draw loan, but technically you don't have to file for forgiveness. I think just some banks are saying, hey, if you've used the money, can you get your forgiveness application in? You also have to demonstrate a 25% reduction in gross receipts from a quarter in 2020 compared to a quarter in 2019. And it has to be the same quarter. So if you do Q1, it's got to be Q1 2020 to Q1 2019. Same things, second quarter 2020 to second quarter 2019. The other thing to note is that they did say if you have a fiscal gross receipts reduction by 25% or more over the entire 2020 compared to 2019, you can go on a fiscal, then that would be enough to demonstrate the 25% reduction for the quarter. They're doing that because they said there is a lot of small borrowers that maybe don't have quarterly information and they rely on their fiscal information. So that's why they made that exception. The CAA also expands entities that can receive a paycheck protection loan, which would allow some entities that didn't go get it in the first round, so a first draw, they can now go get it in the second round. And they've expanded housing cooperatives, 501c6, but you cannot, but there's lobbying restrictions. Then going on more, I'll walk back on some things related to the first draw paycheck protection, but borrowers that can receive the second draw PPP loan, it's 2.5 times their average monthly payroll costs. And that's either a 1 year prior to the loan, or you could take a calendar year. Now, if you're in the restaurant industry with the NAICS code 72, you can get 3.5 times. And then no individual paycheck protection loan can be greater than 2 million. And I actually had an issue come up with a client on this yesterday where they filed during the first round of paycheck protection with their parent entity and then kind of all their subsidiaries as one loan app, and they maxed out what they could get. But if they did that same structure for the second draw, they would only be able to get 2 million, where if they broke everybody out, they would be able to get 4 million. So this time around, they're breaking everybody out and we're having to substantiate why that's okay. And it is okay. In part, they probably should have done it the first time around, but the regulations were coming out so quick and changing that they just kind of went with what they thought they should do then. And now they're doing something different this time around. So those kind of things can be tricky for borrowers. And what I'm recommending and what I've seen clients do is if you don't want to leave anything on the table, and if there's a way to substantiate what you're going to do to make sure you don't leave anything on the table, reach out to counsel, get some documentation in place, and make sure you feel good about what you're doing.
Christina, how are they treating subsidiaries? Are they treating, if the parent filed previously, is a subsidiary treated as a first time or a second time borrower?
So yes, that was the exact kind of issue on this client from yesterday. So the parent filed on the first time around for all their subsidiaries. And now we're going to file with the subsidiaries individually on the second time around. And he said to me, well, technically each subsidiary didn't file for a first draw. And I'm like, well, technically they did, because those subsidiaries couldn't go back and now file because they did get money. So we're having to back that up with documentation to support his applications. So it is tricky and it makes you feel uncomfortable. And this particular borrower has actually decided they're going to move forward with the main one. And then once they get that one approved, they're going to file all the subsidiaries because they don't want to jeopardize the first one with other ones in the pipeline. Now, I think it's smart as long, since he's on top of it now and he's applying now, but the window for these is, I think, March 31st. So if he was calling me on March 20th saying he was going to do one and then wait for the others, I would say, well, you don't have that amount of time. So I think these are things you got to think through. And then for this client, he's actually asking me to put together a legal memo to support what he's doing. So it's going to be in his files. And if he needs to provide it to the SBA or the bank, he's got something to back up what he's doing, which I think is smart when you've got these kind of gray areas, because a lot of gray areas have been opened or are there because the legislation changed over time and people did things as quickly as possible, trying to figure out what was the right thing to do. Then on the forgiveness piece will be equal to your payroll costs. And what they've given for the second draw PPP loan is you get a range of the 8 to 24 weeks. So you could say, well, I'm going to take 8 weeks or I'm going to take 9 weeks. you would take, basically, once you spend all the money, whatever that number of weeks is the amount of weeks you're going to take. So it's a range. You're basically open to any amount up to 24 weeks to spend the money. And they've added in some additional expenditures that you couldn't have claimed the first time around, which I think I talk about on the next slide. But I just wanted to note that you're still obligated to the 60/40 payroll costs compared to non-payroll costs. And you still have the safe harbors that were there before. So a lot of the CARES Act that was previously in place is incorporated. The eligibility is different because it's got the 300 or less instead of 500. And then they've added in things that you can claim for forgiveness, which I'm going to get to.
Question for you about the headcount. I know that was one of the big things that was an issue. Round one, you had to maintain the headcount all the way through. Is that the same in second draw?
So yes, all of those things still apply. But what's interesting is they're going to have to issue more guidance because the safe harbors that you could add back on to be able to not have a reduction, those safe harbors, I think, have expired or about to expire. So they're going to have to extend those safe harbors to match the second draw timing. But the nice thing about the employee count is now you're looking at employees as of today. So for example, I had a borrower that applied for the first round Paycheck protection. At that point, they had, 300 employees. Well, they lost employees. They dealt with that issue, but now they're applying for the second draw and now they have 280. So now they just got to hit 280 again. And hopefully most businesses have stabilized. So keeping the headcount at this point is not as much of an issue because hopefully you've lost everyone you're going to lose.
Right. Well, the payroll, the calculation, is it against the 280 or the 300 when you're making the loan? Are you applying for
Yeah, it's going to be against your payroll costs now.
Now. Okay.
Yeah.
Cool.
Well, I take that back. You have the ability. So on the previous slide, you can either take the last 12 months or the last calendar quarter. So you could take 2020, but maybe you don't want to take that because then you're stuck, having to get somewhere where you don't want to get. So for example, the borrower I talked about, they were like, we're just going to take the past 12 months. We're not going to try and capture 2020 because that's the amount of money that we need. And it's on point with the amount of employees that we have.
Perfect. Thanks.
These are the things that have changed in the second draw. They've increased the uses and forgivable expenses. They've clarified seasonal employers and the loan amounts you can receive. I'm going to get to so I'm going to go over these in more detail. So this is kind of high level. They've excluded the EIDL grant. So we had a lot of borrowers that filed for forgiveness and you had to tell them if you received an EIDL, and then that amount of the EIDL, so 10,000 or less, was your loan balance because you couldn't get both 100% forgiveness and the grant. Well, now they've changed that. They've said, no, you can get the grant that's separate and apart from forgiveness. So there's a lot of borrowers who are waiting for their banks to give them new paperwork to say, yeah, now your loan is entirely forgiven because you don't have to repay the grant. So that's something they've now excluded and they'll go back to correct. They've added a simplified application for forgiveness for borrowers of 150 or less. And that goes to, Jason, the question you had on amounts. So the borrower that I had, they had a loan of 157,000, the first draw. And we said, let's just capture the 150 so it's easier the next time around. So, because that's all they needed for payroll this time around because they lost a couple employees. The other big change is they are now opening the first draw paycheck protection to borrowers who returned all or a portion of their loan so they can reapply. And also they're allowing borrowers to increase the amount of their paycheck protection loans based on these additional things that they've added for forgiveness and expenses. So in a sense, people can now apply for a first round PPP if you didn't get it. Now, the tricky part is if you apply for a first round PPP now, you're definitely not going to have time to apply for a second round. But hey, you can get something. So they've opened it back up to applying for first round paycheck protection. And I do know there was a handful of borrowers that were really concerned around the necessity FAQ that returned their money before additional guidance came out, and then additional guidance came out saying that they could have gotten a loan, but they'd already returned it. So this will be hopefully a welcomed change for some borrowers that probably were saying we shouldn't have pulled the trigger to return the money so quick. Now I want to hit on the allowable uses that they expanded from the first round, and their operating expenditures, software, cloud computing, and human resources and accounting needs. I think in my experience, they've added those because those needs have been substantial with COVID. Computing and human resources and all our accountants are going through for all this stuff has been much more substantial. You've got property damage costs. I thought this was interesting. I didn't know if they were trying to capture some things that had happened during 2020 that resulted in property damage. I don't necessarily think COVID resulted in property damage in and of itself, but those are property damage not covered by insurance. Then you've got supplier costs, which has been something that's impacted, I think, just about anybody. PPE, the things you've done, or I'm sorry, that's the next one. I'm sorry, supplier costs are the ones, they're trying to capture things that you've had to pay, your operating costs in that. Then the next one is the worker protection, which I think has affected just about everybody. And they've tied it to things that are in adaptations and equipment that are in state and local guidelines, CDC, that sort of thing. The CDC has a list on their website of recommendations for equipment and adaptations, and it's pretty broad. And while you might say, well, this isn't exactly in line with something that's stated, I think every borrower could have a good position to take if they've made a change for COVID, that they could find a way to capture it. And that's another one I'm recommending. If you're uncertain about something, but you want to try and capture it, maybe reach out to counsel to substantiate why that is a COVID expenditure. It also adds that you can claim insurance benefits that you've paid to your employees. So before, it wasn't as clear. So they've just added in that vision and dental insurance are all included as payroll costs, which will increase your payroll costs because you've got to still meet that 60-40 split. This is on the seasonal employer that they've added some definitions around and also tried to clarify the amount you can claim. I'm not going to spend a whole lot of time on this. I think it's really specific to certain industries, but they've done that, which maybe seasonal employers didn't get a first round, but now they can. So, and I'm happy to talk about any of these.
Manufacturers do we have on the call?
What's that?
I said, how many seasonal manufacturers do we have on the call?
Yeah. Then, all right, this goes back to the EIDL, which I talked about. So they've repealed that you can't get both the 100% forgiveness and the EIDL advance, which is great. That's going to add a little bit more money to everybody's pockets. But to go back to other grants, you can't get a Shuttered venue grant and a second draw PPP. And as I said, you should be waiting for further guidance from your lenders on how to fix the EIDL grant to say it's no longer applicable to the loan. They've got the simplified application for 150 or less. So when you apply for a loan that's 150 or less, you don't have to demonstrate the 25% gross receipts reduction in revenue. But when you go to apply for forgiveness, at that point, you're going to have to give them evidence of it. So that was something to note on the 150 or less. And then let's see. That's all about simplified forgiveness. Then the next, this is just expect additional guidance. I wanted to get to the tax piece, which here it is. So the tax piece is they have changed the tax, not tax code, but tax guidance. Basically before, it was understood that while the paycheck protection loans weren't income, they were not allowed to be deducted as when you're filing taxes. And now they've said they're not included in gross income and they are allowed to be deductions on your tax filings. And a lot of employers were really happy about that. And that goes to both paycheck protection, EIDL grants, shuttered venue grants. Talks to the tax piece, just that the tax clarification applies to EIDL, shuttered venues, and paycheck protection. Oh, this will take us back to the first round paycheck protection, and this is specific to borrowers that received a loan of $2 million or more. They've issued the questionnaire that's come out that any borrower who received a loan $2 million or more is going to have to fill out. The questionnaire is very concerning. It focuses on what actually happened to your business after you got the loan. So the questionnaire asks questions about how did you do in Q3 and Q4? And that is as if to substantiate the necessity certification you made, which the necessity certification is focused on what was going on at the time you applied for the loan. Well, nobody knew what was going to happen in the future. So the questionnaire is very concerning. What we're recommending is that you send documentation in with the questionnaire to try and refocus the narrative, because with the questionnaire, they're saying, so you've got 10 days, real quick to hit on this, 10 days to return the questionnaire when it's sent to you. Typically, banks are sending them when the borrowers apply for forgiveness. We have seen some banks send them prior to forgiveness, but for the most part, you're going to receive the questionnaire when you file for forgiveness. Failure to complete the questionnaire and return it could jeopardize your loan. Going back to what I was saying before, the SBA has said that this questionnaire is the first part of the audit process for loans $2 million or more, and we know all those loans are going to be audited. And they've said that they can request additional information. I'm recommending to borrowers, don't wait for them to request additional information. Put your narrative in the record now. Because if they don't come to you and request additional information, then all you've done is given them the questionnaire, which just talks about what actually happened to the business, which is not what necessity is based on. Necessity was based on the time of the loan. So I'm telling a lot of borrowers to think about the things that says they're not required to ask for additional information. So then what are they asking, or what am I recommending that borrowers include? Is the national impact. What was going on in the nation is relevant to your necessity. I mean, everyone was watching the news and thinking, wow, look at all the unemployment, look at all the jobs lost. That was significant and impacted what you decided to do. You heard a lot about second waves of the virus and how that was going to impact you. Those are all relevant. The shelter in place orders, how that impacted you. And then also what they're putting out from a articles, what economists were saying about the economy. So I'm recommending borrowers focus on what national was going on and then what was also going on in their business or industry. So if you have projections or forecasts that you put together in March and April or May when you applied for the loan, those would substantiate that you thought you had a real necessity. Any minutes that you have for board minutes or discussions that you had with your key employees, your costs that you spent to accommodate the ever-changing guidance and safety, your impact if you had to transition a lot of people to work from home, those things that impacted you, and then your articles from your trade associations or your industry where it said, oh man, it's looking bad for this industry. Those are great. Those say that you were relying on the experts in your industry and you did see that there was a necessity. So that kind of goes back to the first round PPP, but I think borrowers are thinking about that because they're either filing for forgiveness now or getting that FAQ now. And then I think, real quick, the audit process, and I hope really none of you hear anything on this. The SBA has the OIG, the Inspector General, the Office of the Inspector General and the Department of Justice. Basically, the Office of the Inspector General typically handles audits for the SBA, but they are so inundated that they have rolled over audits to not audits, they've rolled over ones that they've identified as issues to the Department of Justice. So an audit versus a fraud. So audit is, hey, we're looking into you. Fraud is, okay, we think there might be a problem, so now we're rolling it over to the DOJ. The OIG is handling some fraud cases. The DOJ is handling some fraud cases. It's really interesting because the DOJ has had a lot to do with Secret Service for all the election stuff that's been going on, so they have been really burdened. Now I think they're going to refocus, but there are so many issues with fraud cases, or they don't really know what they're looking at. So you want to be really careful. If you do get indication that there's a fraud investigation going on, please reach out to somebody that knows what they're doing. Taylor English has actually a white crimes division, which I've been so thankful for, because we have had a small number of borrowers already investigated. And I've said, wow, this is a bit out of my wheelhouse. And Taylor English has white crimes people that deal with the DOJ all the time. So they're used to how things go there. And they also have already probably had cases with the agents there. So that's been a great resource for me. And between myself and it's actually Bill Dillon at our office, we've been able to handle some fraud investigations, which are ongoing because, like I said, they're taking a lot of time. And with that, and I didn't mean to scare everybody on that, but just don't think, oh, I'll just give them everything, I'm a good guy. Get someone in your corner to make sure we're giving the narrative we want to give them. I'm sure you all are good guys, but let's do it right.
Yeah. Like I said, everybody, Taylor English has an attorney for just about everything.
Yes. That's all I got. Are there any questions, Russ? Or
I don't see any. If you have any questions, feel free to use the chat. I've got the Q&A box open as well. So if you have any questions on for Christina, just feel free to type them in. But if not, we'll go ahead and switch over to Renan. And just in case any of you are wondering, Gliani was originally scheduled to speak today, and she had a family emergency come up. So Renan is pinch hitting for us, and we are very, very grateful. So he caught up very quickly, but he's also a partner in our labor and employment group, and he's very well qualified to talk on these issues. So I have no concern with him stepping in for Gliani. So Renan, I'll just go ahead and hand it over to you, and you can go on ahead. You're muted. I think you're muted.
Great. Good morning, and I think Christina is going to be putting up the sharing the slides with you. So yeah, I'm going to talk a little bit about some of the issues that might be affecting your employee workforce during COVID. So one of the big pieces of legislation that came out as soon as COVID really became big was the FFCRA, which was an extension of the Family Medical Leave Act. One of the bigger issues for employers there was that, if one of your if an employee's child had to was quarantined or their school was closed, that you have to pay for 2 weeks of time, assuming you were a company that is under 500 employees. It also required employers to pay if an employee had symptoms of COVID and was getting a medical diagnosis. Handling something for their, caring for a loved one. Anyways, that ended. The requirement for that expired on December 31st of 2020. So now it's voluntary, and that's up through March 31st of 2021. And so the benefits, if you want to do it as a company, is that you can get a dollar for dollar tax credit from quarterly employment taxes. But again, it's not required anymore for companies that are less than 500 employees. So, that's just something that's out there. So I throw that out there now, but it's not something that has to be that you have to follow anymore. We go to the next slide. So some of the risks that are still out there, though, are with the Americans with Disabilities Act. This law has been out there for a long time, and it really covers employees that have a disability. Now, the term disability is very broad, so you can have diabetes or migraine headaches or cancer that's in remission, and you could still be considered someone with disabilities. And we're going to see, I think, a lot of litigation out of this because of people who don't want to come to work due to COVID, that they believe that while they may not have an active symptoms, they're afraid that because they are disabled, if they were get exposed to COVID, that would it would expose them to some serious side effects and serious illnesses. So, one of the we're going to talk in a little bit about how to deal with those situations. Another thing is that's out there is FMLA leave. Again, FMLA leave has been around since the mid 90s. It's not a new piece of it's not a new piece of legislation that's out there. This is to be qualified to or be eligible for FMLA. You need to have you need to be someone that's worked for 12 months. It worked at least 1,250 hours, and you need to have a serious health condition. So it's not as broad as the ADA in terms of the what qualifies as an illness or a serious health condition, but it does require, instead of an accommodation, it does require that you actually allow people time off or intermittent leave for 12 weeks. It can be unpaid, but it's some things that you need to be aware of if you have employees who either become sick or need to care for a family member who has a serious health condition. You need to think through before just firing them. You need to think through whether they're eligible. We go to the next slide. Another area where employers have potential risk is denying an employee an accommodation because of a sincerely held religious belief. I think we're going to see a lot more of these issues. Again, when you decide to open up your office and requiring people to come to the office, if someone were to say, well, and you were going to require a vaccination, which some companies may decide to do, then if someone were to say, well, I don't want to get vaccinated because of my religious belief, then you need to go through the analysis. Now, a sincerely held religious belief isn't, I'm afraid to take the shot. I'm afraid of that the testing for the shot hasn't been what I believe it should be, or that you're scared of anything related to COVID. That has nothing to do with it. It has to be a sincere religious belief, and you just but the problem is that if someone actually comes and says that they have a sincere religious belief and they provide you like some paperwork on their religion, it's really hard to challenge. So you need to be careful when that's just to be like a red flag for you to think through. If someone says, if you decide to do a vaccine, make it mandatory, you really need to think through whether or not to force someone to come to let's put it this way, force someone to either get the vaccination or fire them for not automatically firing them for not taking the vaccination if there's a sincerely held belief. Now, the good thing is that the standard for the ADA and the Americans with Disabilities Act and the religious discrimination laws is that there's only so much you need to do for someone who has a religious belief in terms of accommodating them. The actual standard is that if it's more than a de minimis cost, then there is not an accommodation for them. In other words, if you would have to pay another employee to do that person's work and still pay that employee at the same time, that would not be an accommodation for someone who can't do something because of a sincerely held religious belief. We can go to the next slide. I think let's go to the next slide again. So let's talk about some safety concerns. I think one of the areas I also see a lot of employers are struggling with is dealing with employees who have issues, related to COVID. I mean, COVID it hasn't just caused, physical symptoms for the people who actually get COVID, but there's all the effects, mental, social it has affected, your workforce population, whether it be their kids are, haven't been able to go to school and are not, and they're having issues and they need help, or you have employees who are, have alcohol abuse issues, stress, suicidal thoughts, all those kinds of things. So you do have an EAP. Most of you probably have an EAP, employee assistance program. Make sure that you remind employees every month that it's out there if they need it. It's usually no cost to the employee, so I'd throw that out there. Next slide, please. Safety and cleaning is also important. OSHA, which I'm sure a lot of you are aware of, they when they talk about safety and health, they also talk about making sure that your business is at least taking the precautions and taking steps to make sure that there's a safe environment. And that people are not having the opportunity to get COVID. So I've seen a lot of employees actually send letters to OSHA, and because I get the letters from OSHA when they're sent to the employers. Some are claiming that they've been retaliated against when they raise an issue related to cleanliness. Others are complaining that their company is not taking the steps to make sure that the company is preventing COVID on the property. So what I would do is I'd have a plan. I would use the OSHA and the CDC guidelines, and you should be in pretty good shape if you do that. I would just have a deck, have a game plan, something that you can send to, and send it also to the employees so they know it's out there, and that you take it seriously. That way you can send that to OSHA if you do get complaints, so that they know that this is not something that you're just dismissing, that this is something that you've already addressed. So let's talk a little bit about leave compliance. So, let's give some examples, like some real life examples of what's probably gonna happen, and you're gonna have to decide whether or not you're going to. Again, this is going to be months in the future, whether you're going to mandate COVID vaccine or not. But even if you're not mandating COVID, the COVID vaccine, you're going to have employees who are going to say, "Oh, I'm not coming in. This is crazy. No way, I just can't come in." And so, at that point, it's really hard to determine why this person isn't coming in. So the first thing is, when someone says they can't come in because of COVID, you want to ask questions. And if you can go to the next slide. Yeah, you don't just, while you may be aggravated, there's going to be a lot of reasons that you may be unhappy. You don't want to set a precedent. You don't want other employees to feel that they can stay home. But the first thing to do is always ask for additional information, ask questions. So here's an example. Boss, I got a fever. I'm scared. I'm heavy set and I have diabetes. This stuff runs in my family and people have died from it. Okay, this should be a red flag that this is an issue that you need to do an analysis under the Americans with Disabilities Act. Now, the ADA, the Americans with Disabilities Act, when you learn that someone has a potential disability, you have an obligation to go through the interactive process. Now, the interactive process isn't something that has to be formal. It just has to be something that is informal, a talking between the employee and the employer to try to see if there's a way to deal with that person's disability. So we were talking earlier about OSHA and FMLA and ADA. So under OSHA, based on OSHA, you could talk about making sure that you have disinfected the areas, and you could you can send, the deck out that that everything in the in your workplace is up to snuff, that you're doing everything that's required under the law. And then I think, but here, the main thing would be ADA. The ADA issue would be the biggest thing you need to really think through. And if you want to go to the next slide. And yeah, go ahead. Okay, so you have, boss, my boyfriend's kids are with us because their school is doing virtual learning and his ex has no internet. One of them keeps coughing and cannot taste his food. I'm going to get him to see a doctor. Boyfriend has to go to work at least 4 days a week and he makes more than me. So if you can keep going down, the issue here is that you're going to want to figure out is, whether or not, this person is eligible for FMLA, who, is, again, it's sort of complicated and I don't really want to get too far off, but just because, FMLA covers parents and children. The question is, does it have to be the actual parent or can it be someone who's taking care of the kid? Is this person, so this person may be eligible for FMLA leave. When you see a situation like this, you should definitely at least, talk with your HR folks or talk to legal counsel. The other thing you may want to think about is whether or not I'd even want to bring this employee back to work. Should they be quarantined for 14 days or for 10 days because they've been exposed to someone with COVID? Go to the next one.
Renan, before I advance the slide, I have one question on that I've heard in related to, should I quarantine them? So for example, if you know an employee took a flight somewhere and you're like, hey, we don't want you back in the office, can you force them to take time unpaid when they don't have a known exposure? I mean, in the case where, maybe their kid is actually sick, or do you have to accommodate them and not deduct pay from them? Does that question make sense?
Yeah, no, absolutely. So you can make, and the EEOC has been on board with this. This is a pandemic. This is, the World Health Organization has called this a pandemic. And because of that, the rules are a little bit more lax. If someone has done something that is risky, you can have policies out there, saying, hey, you're not allowed to travel, by plane or out of state. And if they decide to do that, then you absolutely can tell them not, they can't come to work. If they cannot work remotely, and the only way they can work is actually coming to the office, then yes, you could tell them, they need to take, 2 weeks without pay. Now, if it's an exempt employee, you can only deduct for, full weeks that are off because of that. You can't just say, oh, I'm only going to, I'm going to deduct 2 or 3 days of this week, and only pay you for 2 days. So in that situation, it would need to be a full week, but you can. Now, again, that's only in a situation where there's no way they can do their work, but for being in the office and potentially exposing people at work, and you've had a policy. So that's the way. That's the best practice if you want to take that approach.
And would it need to be in your policy, or it's like employers are moving so quickly right now, like, oh, you traveled on a plane, you know what? We don't, we're gonna, don't come in. Or does it need to be like you've got the policy and then they're on notice and then you can do it?
I would just send an email out. I would send an email out about it. It doesn't need to be in like some fancy policy. As long as it's been communicated to everyone, I think you're fine.
Okay.
Or however you communicate. It doesn't have to be like, you don't have to revise your handbook to get that in there to make, to enforce something like that.
Thanks, Renan. And now I'll advance your screen.
Okay, the whole situation has really stressed me. I take care of my mom. She's 75, recently recovered from breast cancer. My psychiatrist increased my meds, told me to avoid until blood pressure under control. So this is an interesting situation and something you need to think about. ADA doesn't just cover physical disabilities, it covers mental disabilities. So if you have someone who's OCD and for them to be, for them to go into an environment, where they could potentially get COVID, would just would exacerbate that, then that's also potential time you need to think about making accommodation as well. So it may not be someone who has asthma, but it may be someone who has a mental disability that needs to be accommodated. So you may need to think about letting that person work from home if they're able to work from home by not being there. Again, it really is going to depend on your workforce. You need to think about whether or not the person is in a position that they can work from home, or whether or not they actually have to be at work. They're actually running a machine. They're actually using tools on a day-to-day basis. So only your culture and what your employees are actually doing on a day-to-day basis, and by looking at that, that's how you're going to have to make a decision. Because in a situation like this, you may have to allow someone to work from home and pay them to work from home, or there may be a situation where it's impossible for this person to work from home, and you just have to say, hey, I get it. Take some time off. Maybe they're FMLA eligible, and go from that perspective. Taking the risk out of telework. So, yes, I think you need to. When you're looking at that, you need to take, consider the cost and risk, and that's what the EEOC expects of you. So, how much is it going to cost you to make this accommodation? What are your resources? What does their position description say? A good pro tip is to have a really good defined job description, because that way you can use that to justify your decision. It doesn't look like you're just making it, on the spot, that you're actually saying, hey, these are the essential functions of the job. You need to actually be at work. Your job requires you to do X, and that can only be done, on the job. So those are things. And I think we're running short on time. So let's go to the next slide. So I think if you're going to furlough and terminate an employee, the difference is for furlough, it's they're still technically employees. They're just not paying them for the time. You can they can still get unemployment. Terminating is they're completely off your payroll. You've separated them from work. They're no longer your employee. You're not going to it's not you're going to give them the separation notice. With the furlough, you're typically not going to give them the separation notice. You're just going to record and file for unemployment on their behalf. Whereas if you terminate someone, that's someone who's going to do it on their own. With someone who's furloughed, typically, they still may have their employee benefits, but all this stuff should be documented. You should be thinking through, why you're doing what you're doing. What are the categories? Why did you decide to pick this group of people and not that group of people? Does it affect a minority group of employees greater than another group of employees? These are all things you should think about and possibly definitely run through human resources and possibly through counsel before you do it. I think that's it. If anyone has any other questions, I'd be happy to. We can talk about the vaccination, about whether or not you want to mandate vaccinations. These are conversations you probably should start having. Again, the distribution of vaccine hasn't been to a point where you probably want to have such a policy, but you may want to go through and think through whether or not you want to mandate it. And if you do, you got to make sure. I think the two biggest risks you have are the ADA, people with disabilities and religious beliefs. You want to make sure that those people are being protected. You may want to think about paying people to take the vaccine. There's been some employers that are doing that, which is fine to do. A lot of grocery stores are doing that right now. The EEOC has said it's fine to, you can mandate it. The problem is you've got to go through analysis before you decide to terminate someone. You got to look to see whether or not they can be accommodated if it's because of a disability or because of a religious because of a sincere religious belief. But person who says, hey, I'm not getting a vaccine, I don't believe in vaccines, it has nothing to do with religion, That's person, if they decide not, and you have a COVID mandatory COVID vaccine policy, then that's someone you probably could get rid of and terminate. So, but anyways.
Yeah, and that was kind of one of my questions in that same space is if you do the mandate now and you put it in your, employee handbook that this is going to be required that you get the flu shot and, and COVID vaccine, what happens to like grandfathered employees if you implement a new policy? Again, you can tell my HR experience here is really showing through. But if you, as a company, implement a new policy that would impact the ability for somebody to, if you got a maintenance tech that goes out to, service equipment out in the field, that's part of their job twofold. One is, can the mandate be implemented, with a date certain, I guess, saying from now on, these are the requirements. And then also, what's the liability of a company? The biggest thing that I keep hearing from the manufacturers that reach out to me is say, if I mandate and they don't, I mean, if I don't mandate and one of my employees goes out and infects another factory by working on a machine, what's my liability as a business? Does that make sense?
Right. So to answer your first question, yes, you can. I mean, you can decide, tomorrow, you could say, what, the vaccine, the vaccine's been distributed enough. I feel comfortable that enough of my workforce has access to the vaccine. You could say tomorrow, we are requiring everyone to get the vaccine. I mean, you may want to roll it out slowly just because it may take time for people to get the vaccine. You may say by a certain date you need to get it. Probably the best way to do it. You may decide to pay your employees to get it done as well, but you can do that. Absolutely, 100%. You can mandate it. The questions you ask is, if you don't mandate it, yeah, there's, we talked about the risk if you do mandate it and you don't potentially reasonably accommodate a couple employees, but a couple categories of employees, but there's also potentially risk if you don't mandate it, right? You have the OSHA, right? You have people you talk about the customers, but you also may have employees who'll be at risk by being exposed to employees who have COVID. Yeah. But the other part is, you're right, is possibly being exposed to, to your suppliers, getting upset at you because you had an employee that brought it in there. Now, I think that's, and you have workers' comp issues as well. But I don't think, again, I think it's going to be, I think you would the way you would get in trouble there is if your supplier said, hey, you're not every person has to be vaccinated before they are allowed to come into our property or to do work with us. I think absent that, if you didn't know, I don't know that you would be negligent by not requiring your employees to be vaccinated. Right. I just think you need to be mindful of, you should always be mindful of the agreements and the policies of your suppliers and vendors and customers, so that if you've agreed to mandate, if you've agreed that all your employees will be vaccinated, you need to make sure that they're done, that's done. I don't think, absent that, I'm not sure that you'd have automatic liability unless you were negligent. You knew this person had COVID and sent them over there.
And the last crazy question for the day, and I promise I'll hush, but if you mandate that you get all of your employees vaccinated, we've seen that there's a percentage, very small percentage of people that have negative response to the vaccine. If I send Sally to go get a vaccination and she gets deathly sick or whatever, and I know the vaccine companies are not liable for, any adverse reactions to it. But if I mandated that, does that throw that liability back on me as an employer?
No, and I think the best practice is to have a third party provide it. If you want to work with a third party to offer them to vaccinate at your workplace, that's fine. I mean, when they give it to you, they give all of the potential side effects. So both they and you will be protected from that. I mean, the risks are what they are. They have to sign a consent form to get it. You can't force them to get the vaccine. All you can do is say, hey, you can't work for me unless you do.
Okay,
And
that's the angle.
and so you're not going to have any liability if you hire a third party who who handles it.
Okay, sweet, perfect.
All right, I don't see any other questions in the chat. So, and we're running up. It's a little bit after 11 now.
Right. Well, one last thing as we wrap this thing up, Russ, I tell you, man, you have knocked it out of the park again. Fantastic job.
No,
You brought
not me, but
yeah. You brought
all thanks to
the
Christina and
expertise
Tom.
to the table in Taylor English. It's another huge win for GMA being able to have access to this kind of information and ask these questions. So those of you that are listening on the podcast, there are a variety of slides that are going to be attached to the notes in this podcast. So you could go watch it on a YouTube replay, or you can just download the slides. Those are going to be available if you got questions about that. But as always, if you got additional questions, I'm gonna tee this thing up for Russ to share his contact information. Remember that we do have a lot of people that are just going to be listening to the audio track. So with that, Russ, how's the best way for people to get a hold of you?
My email is probably the easiest way, rdunlap@taylorenglish.com. Of course, if you just Google search Russ Dunlap, Taylor English, I should be one of the first entries there, and you can pull up my web page on the Taylor English web page, and it'll have all my contact information is there. I'm just in the process of typing my email out in the chat too, if anybody needs that. My phone number is 678-336-7131. If anybody is interested in contacting me by phone, and if it's okay, Jason, for us to talk about, Jason and I are discussing future webinars as well on some pretty interesting and cool topics. So hopefully we can get some information out to everybody pretty soon.
All right. Well, Rayon, Christina, Russ, again, thank you so much for your time, for the information. We're really blessed to have you guys part of the team, and it has been yet another great day at GMA. We will see you guys on the next event. Have a great day, guys. Thanks.
Thanks, bye.
Take care. Bye-bye.